So we've been talking about swaps, what they are, how they're charged, what role they play in transaction costs, etc. Um,
Mhm.
I remember you mentioned also that you wanted to cover in a bit more detail why Darwinex will almost always charge higher swaps than market makers. Could you shed some more light on that? Why is that?
Yeah, well, so the reason that swaps are charged is because positions have to be financed overnight via this tomorrow next roll process that we've explained elsewhere, and that's also quite well covered in Investopedia and other places. And really, you have to remember the fact that we are an agent, basically passing on a stock of risk or a flow of risk from the client onto us onwards on its way to the broader market to external counterparties that take on the ultimate uh, other side of a client's trade. So let's say, like, let's just do an example, okay? So Ali is a large client of Darwinex, and he's got 35 million position in the euro dollar that he wishes to roll over from this night to the next, okay? And in that setup, um, we will have had to, for Ali to do that, we will have had to borrow those dollars from the street in order to buy those euros on behalf of Ali, which means the street is going to charge us for the borrowing rate. And it will depend, of course, if the carry is positive or negative, but the situation is we have a carry one way or the other, and that carry, the carry we've got will be a mirror image of Ali's carry vis-a-vis us, okay?
Okay.
Now, if that's the case, then we have to pass on the institutional cost of carry, and that's what we do. Um, but imagine that we were a market maker, which we're not, and in that case, then this would just be a bet between us and Ali, and typically we would be a market maker because typically Ali is a losing customer, and therefore we know we're going to be make the money back one way or the other. So we might as well look more attractive for Ali to place his bet with us by not charging those swap rates because we don't have them to begin with.
Mm-hmm.
Um, so, and I guess that kind of that goes to explaining why we don't have the opportunity of charging low swap rates because we have to fund those out in the street. Now, there's a counter argument to that, and that is the internalization opportunity that arises from the fact that Ali might have a 5 million long euro dollar stock with us,
Yeah.
and say another customer, Peter, could have a $5 million stock short with us, in which case de facto Ali and Peter are lending and borrowing from each other,
Okay.
and we wouldn't have to fund that out with the street. That's the so in some cases we could choose to partially subsidize the swap rates below what the what the wholesale counterparties would charge us because we don't really have a swap position in this case, despite the fact that we're not capturing any flow. This is just by virtue of the fact that we have invested into having lots of customers. But in our case, as Darwinex, we have something which sets us apart from most retail brokers, and that is the Darwin investor proposition. And then we have like the top 20, 30, 40 traders, they kind of managing upwards of 100 and, there's a substantial um, stock of investment they've got, and they might have very substantial overnight positions that are in the market, which make it quite hard to offset or to internalize any of that. So like there's no use, I guess, if Ali has a 100 million long position and Peter has a kind of 50,000 euro short position, there will be an overlap for the $50,000 that Peter has. But if we were to offer subsidized rates, then people would choose to even arbitrage us, which is stuff that happens, by the way. Like if people go to I've seen a site called Forex Benchmark recently, and what they
Mhm.
publish is arbitrage opportunities between swap rates.
Yes, I found this
Uh,
one too. This was interesting.
yeah, so basically, I think that what I dare our customers to do is to basically blow up those arbitrage positions because they're essentially free money, and let's see how long they get those low swap rates offered by the market makers.
Yes, indeed.
So, I mean, anybody, I guess the main difference is why do we charge larger rates? Well, because someone can park 500 million overnight position without us having any problem whatsoever with it because we'll be funding that over with the street. And if we offered basically a swap rate which was artificially out of the market, then we would be liable to arbitrage, and it would be costing us pretty money because we'd have to fund it out of our pockets. So that's the reason why we offer the as close as possible rates to wholesale, and others who are presumably internalizing a lot of the risk don't have to or can afford to subsidize it.
Okay, this is good for people to know, because often we do get this question in our community as well as through our customer success team, and it's good that people understand why this happens as opposed to just raising it as an issue or not.
Yeah, I guess if I had to summarize, there's two reasons. One is we are an agency broker, and the other one is our investor proposition, in the sense that we can have whale-sized positions,
Yeah.
which will make it quite hard to basically internalize spread, and depending on if those whales have actually placed a position. And then the last one is, by all means, go to Forex benchmark and start arbitraging those guys.
Some of those
that,
opportunities are pretty nice. I was just
that's an
looking at it
opportunity.
last night.
It's free money. Go ahead and do it. By all means.
I was looking at it last night. I was like, oh, what are the odds? Let's just cook something up in code right now to do this. And then my son came along, since we're all huddled at home, so it didn't quite work out for me.
Yeah, no, the whole coronavirus, we've all kind of kids parties, but yes, that's the opportunity. I don't think it's a huge opportunity. Just like latency arbitrage, the people pick you up quickly and you start getting requotes. But in this case, you probably you get away with a small position, but once you start to roll over sizable positions, somebody will call you and say, we've changed the swap rates for you. and then you will get the Darwinex swap rates.
Yeah. Well, great. Thanks for explaining that one. This is really important for a lot of people.
My pleasure.